Thank you. I'd like to call to order the special called investment committee meeting of the Kentucky Retirement System. And could you read the legal statement for us, please?
Yes. For the record, I want to note that this is a special called meeting of the Investment Committee of the Kentucky Retirement Systems. This meeting is being broadcast via video teleconference pursuant to Kentucky Revised Statute Section 61.826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road, Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and not appearing by video, please identify yourself before talking. In the event this meeting becomes disconnected from Facebook, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date.
Thank you, Vicki. That said, I appreciate everyone's attendance on short notice, and I won't apologize. I'll just state the reality that sometimes, particularly these continuing vehicles that we're more or less a continuing vehicle we're talking about today, they do get short strings on time, and but I appreciate everyone sitting in, and we'll make it as short as we can. Could you do the roll call, please, Sherry?
Yes, sir. Mr. Lane,
Here.
Mr. Atkins,
Here.
Miss Bova,
Here.
and Miss Thompson.
Here.
Thank you.
Thank everyone. And nobody has a derby hat on except Ramsey. That's sort of a derby hat. We do have a public comment, I understand.
That is correct, sir. And I will read that now. This comes from Larry Totten, and he writes, considering the volatile investment climate that exists today, I am suggesting that KPPA consider providing an occasional and brief description of where the investments stand in a very layman's terms. Answering a question such as, how are we mitigating the decline in equities, for example? Posting the monthly performance report is very much appreciated, but they lag behind current events by weeks. Thank you.
Well, as Larry correctly states, that we are in volatile times, and I will make a comment, and Steve also will address this directly. But I've been on the board for 6 or 7 years now, I think, and I've very much an observer of the Kentucky retirement system, and I'd call the not so good old days, where transparency was sorely lacking, and Larry would probably agree with that. Sorely lacking. And then Mr. Eager came on board, and we have been timely and transparent in our reports and minutes and the like. But the investment situation is a little bit different matter, and I'll let Steve comment on that.
Sure. Thank you, Pruitt. We certainly understand a participant's interest in how the system's portfolios are performing, especially during volatile periods. And we want to give all assurances that we monitor those portfolios and markets on a daily basis. But unlike an individual investor, as a pension, we have an extremely long time horizon. So we are focused on longer term returns and opportunities. And really, to do otherwise is potentially dangerous and harmful to the long-term viability and health of the pensions. Also wanted to point out, unlike most individual investors, a significant percentage of the pensions investments are not daily valued. So any intra-period performance reporting can really be less meaningful. So we want to give assurance that obviously we are monitoring the portfolios and markets on a daily basis, and we tend not to be reactionary. We tend to invest for the long term. We look for long-term opportunities which are in the interest of the long-term nature of a pension.
And I would like to add the wisdom of the sage gentleman Warren Buffett, who among his 5 rules is to successful investing is approach investment with a long-term mindset. And that's exactly what Steve's saying. The actuarially, we have a 27 or so year mindset, and but you can rest assured that the funds are watched closely in our investment staff. But we will comment directly to Mr. Totten, as of course. Moving on to item 5, The reason for the meeting is we have another opportunity, I should add, to participate in what's not exactly a continuation vehicle, but it's a addition to the same strategy that we have employed with Kane Anderson. Our relationship with Kane Anderson is not something that just showed up on the doorstep. Goes back to 2015 or 16 with their funds. We have an opportunity to invest in what we think is a really good match with our income needs and the stability of a well-managed real return investment. And I will add that this has been, even though the Kane Anderson has been well known to the staff, and we have as some of you know, we use a third party to evaluate these alternative investments, and they rate them, Kane Anderson, highly. And we also had a situation where one of their references was someone I had known for many years, and Anthony and I had a call with him last week, and his references were not only that this is an exceptional organization, it's exceptional enough that he has $1.5 million of his personal money in it. So that carries some weight for us, that he's trusting. So Steve, and Anthony, you want to take it from here?
Sure. Sure. If you could move forward a page there. One more. So thank you for your time today, especially on such short notice, as Pruitt mentioned. We appreciate the opportunity to present this investment recommendation to the committee. I also wanted to specifically thank Sherry and Sandy for going above and beyond, as usual, to coordinate these meetings in that very short time frame. So we really appreciate all of their work. As Pruitt mentioned, in October of last year, the investment committee approved the recommendation to roll a portion of the plan's investment in the Kane Anderson Energy Fund 7, which was a 2015 vintage fund, into the Kraken Resources Continuation Fund. At the time, we noted that while we were interested in increasing our investment in the strategy, unfortunately, there wasn't any available capacity as the fund was already oversubscribed. So following that meeting in October, we have continued our due diligence process with Kane team, internal and external legal, working on documents, as well as conducting several investor reference calls. As Pruitt mentioned, he was on one last week. We also had a meeting for the IC chairs with the Kane team where they went through the strategy. And several characteristics of the fund and Kane strategy make this investment opportunity so compelling. Those characteristics included a very differentiated strategy for the space with favorable expected risk-adjusted return and asymmetric upside potential, low return correlations to both the real return investments as well as to the broader overall public and private portfolio. The strategy's significant distribution yield profile allows the investment to materially de-risk over short timeframes while providing high levels of current income. It also has a shorter funding window, so a significant portion of capital committed will be called relatively quickly. As we've experienced, especially on the private side, there can be a significant delay between when we commit capital until it's called and deployed and invested by the manager. So in this case, we expect a pretty short window, so our committed capital will get invested pretty quickly. As we can see on this slide, currently all of the portfolios are right at their target weight for real return asset class or have a slight underweight of about 20 basis points. So really very close to their targets. And these are the revised targets where we increased the overall asset targets for real return portfolio. The current allocations include investments in liquid proxy assets that we have been winding down as capital we have committed with managers has been called. And as we've discussed, the real return asset class is very broad and includes a wide range of potential investments and strategies. As you can see in the allocation pie charts, our goal in this asset class is really to construct a robust, well-diversified portfolio across the number of differentiated asset classes and exposures. Sherry, if you can turn forward one page, take a look here at if the capital we've committed, including this investment, if we were to approve it fully called, we would be able to almost completely wind down the real return proxy program. That is in place temporarily to provide a risk return profile similar to the investments that we're looking for. It's not anticipated as a long-term placeholder. So once capital is fully called, and assuming this investment's improved, we would be almost at the finality of that program, which is a big step. So with that, I'll turn it over to Anthony.
Yes, thanks everyone. Sherry, could you go to the next page? Thank you. So like Steve said, you can see on this first page how much we committed back in November when you guys approved it. Across KPPA, this is how much we had because it was the amount of investment from the 2015 Kane Anderson Fund. Like Steve said, it was oversubscribed, so there was no way to add any more investment, even though it projected to be a pretty attractive one. Kane did mention that the one way to do it was to subscribe to the fund because this is also in Fund 3. So that's what part of why we did some more work on the fund overall to see what else there was. They also made another investment subsequent to that in a company called 4 Point Resources, which they use, which was stood up with assets from Ovintiv, a public company that was selling some assets in Utah that they found to be non-core, and they used those proceeds to buy something in Canada. And so the Kane Fund, along with another fund, Quantum, they both in management were able to acquire those assets, and it fits a lot of characteristics that they're looking for. There's already some production, and they anticipate that to continue ramping up and to produce more cash flow in the coming years. Like Steve said, I think what's attractive about this strategy compared to some of the other energy strategies, including the other Kane strategy that was originally done by a different team, was that they are focusing on assets that are priority producing. So it's not quite as it doesn't have the venture capital kind of profile that the other upstream funds tended to have from the mid 2010s, where you either make a large multiple of your money or zero. That's not really a profile that we tend to like here. So instead, you have assets already producing, but and with newer technologies, you can drill and also either increase production from previous things that were drilled or into new areas that just have not been done yet by the previous owners. So another thing they do, obviously, a big part of this would be commodity prices, and that's a big worry. But they have been hedging the whole time, so they plan to hedge 70 to 80% of the production out 3 to 5 years. That's just part of the mandate and the strategy. And so I think that's what they've always focused on, having kind of that steadier return. It's not going to be, you're probably not going to have the large outsized returns of the that we were talking about, but that's not what they're going for. But there can be upside if the inventory in the ground is still valuable in future years, because these do deplete, but they buy assets that are pretty large and still have a lot of inventory that is still there for future owners. So that's kind of what we're interested in. They underwrite to 2x 20% net returns. Obviously, if they get that, that's great. That's not exactly what we are looking at. If they're somewhat below that, that's fine. Again, the part of our real return bucket primarily is to provide, hopefully better and different sources of return versus our public equity and fixed income exposures, which you can get cheaply. So that's why we found this to be attractive. Again, so you have visibility into cash flow streams, and it's also not totally blind because this fund has been in the market for a couple of years. They've already deployed about a third of the capital. They've committed about half, and they were able to exit a couple of large assets this year, and those teams are looking to work with Kane again. And so if those work out, that most of the fund will be spoken for with teams that they've already been successful with multiple times in some cases. So happy to take any other questions if you want. But yeah, this is a similar strategy to the Kraken asset that we had in the fall.
Yeah, and I would add a couple of points. So specifically, and Anthony covers this in his memo and mentioned some of it. So, this is a different strategy than the original Kane funds, and we actually think we're more constructive on the strategy. That's why we have interest in this specific fund. And you probably would note that the prior Kane funds, the vintage 2015 was part of our private equity portfolio. And as Anthony mentioned, that was more venture-like. You tended to expect higher risk, higher potential returns in some of those funds. Those were not across the industry. Those were not all realized. But with the shift in strategy and the focus here and what we like about it, both the focus on production, on producing wells already, and not being venture-like, as well as the distribution yield. That's what we think makes this a good fit in the real return portfolio as opposed to the private equity portfolio. He also mentioned, I know commodity risk. Obviously, that's we've seen a lot of volatility over the last several years, and specifically in oil and gas. And the hedging program that they employ here in this strategy really makes it compelling. And as he mentioned, it's a 5-year forward, and it's a rolling 5-year forward, right? So they're continuously hedging 70 to 80% of that production on a 5-year forward basis. And then the upside, as Anthony mentioned, is the realization at the end of term, what the asset is worth there. So we expect to make the bulk of the return and the yield kind of on that cash flow distribution basis, and then with the potential upside at realization at the end of term. And as Anthony mentioned, happy to take any questions, anything specifically.
Dave has his hand up, and I think you're muted, David. There you go.
Yeah. Anthony, first, are there other public pension funds that are invested in this? And secondly, how vulnerable would this fund's returns be should a new administration come in and, through their policies on climate change, upend opportunities for oil and gas to continue to be part of a national energy strategy at some level that is required in order for this fund to function?
Sure. Those are good questions. I know Texas Teachers recently committed to the fund, and they did the 2 continuation vehicles as well. Other publics, I'll try and I can get back to you on that one, but I know there's some others. We just did several references with different folks. There was a union pension. There were some previous investors that could not stay in for the reasons you mentioned, for their own constituents and their environmental beliefs. So there's some folks who could not stay, even though the investment team would have liked to, perhaps. But we talked to some of those folks. In terms of regulation, it's possible, but I think these are already producing assets. So I think that might be more of an issue for the previous strategy, where if things aren't as developed yet. But these are assets that are already going. So yes, it is possible. Of course, these are regulated industries, but we don't view that as super likely. If they're working on existing acreages and properties that have been going for a while.
Thank you, Anthony.
Sure.
Any further questions or thoughts here from the committee?
Mr. Chair, I would move that we recommend this investment to the full KRS board.
I'll second that.
Thank you. And all those in favor of referring, to the full board.
Aye.
Aye.
I think we have it by acclamation. So we will take this in a few minutes to the full board. Thank you very much. And
Thank you very much. Yeah,
With
really
that-
appreciate everyone's time. So thank you.
Yep.
that this meeting is adjourned.